Welcome back, traders and investors. We have Bill Baruch, senior market strategist at iiTrader, on the line with us. Bill, how you doing on this Expiration Friday?
I'm doing great today. Thanks for having me.
Okay, just a little bit your market background and a little bit of your education.
Well, I've been trading for over 10 years, and I went to Taos University, got my business finance degree there, and then went to started working at Lid Waldock, MF Global, ran a trade desk there. So I've been in the business for quite a while.
Okay, and what different markets have you traded over the last 10 years?
Well, the reality is, if it's moving, and we have a process. I have a process to look at things, and if it's moving, I'm looking at it, and I've had some major focuses across the board at different time frames, like gold, different bonds at different times. If
Okay.
it's moving, we're in it.
So you don't have a favorite and the least favorite. You just whatever you can make money in is your favorite, and whatever you're losing money in is your least favorite.
Yeah, we have a process. It could be toilet paper futures if it's the setup's there.
Okay. All right. So you worked on the Lynn Waldock MF Global Trading Desk. So you probably dealt with a lot of different customers. What was the most important trading lesson you learned while working running that desk?
Well, using leverage, you see clients come in and they want leverage to be their friend. At the same time, you don't want to be scared of it, but it's having a process and it's having an exit strategy, for that process because you're going to be wrong. You're not going to be right 100% of the time. In fact, you can make money being right 45% of the time. But it's having that exit strategy, and when you're wrong, understand you're wrong, and it's a matter of how long you stay wrong.
Okay, we talk about risk rewards quite a bit, so that's just reemphasizing that very important point there. And tell us about iTrader.
Well, iiTrader is a futures and commodities brokerage firm, and really we're finding a niche, anywhere with many types of clients, from self-directed, low cost. We compete with those TD Ameritrade, as well as we have a professional trade desk with, we put a team in your corner, so we compete with the broker-assisted levels at some of the other brokerage firms as well, at a better cost, and helping clients, define what they want, and put a plan together for them. We have a system here, and it's the client's choice if they want to be involved in that system. And we make it very easy for them to get updates. And again, anybody from self-directed to broker-assisted, we have amazing technology that many of those low-cost brokerage firms have, and we have, again, the professional trade desk you're not going to find anywhere else to put in your corner when you need it.
So you do it. You have retail as well as institutional clients.
Oh yes, yep. We have institutional clients. We have retail clients of all sizes as well.
Okay, so I see you develop individual plans for customer. I mean, do you have like a stock list of trading plans for people? Then you kind of get their profile and put them into something. Someone's a little bit more risk averse. Obviously, you wouldn't have them trading the S&P futures. But what do you do? Do you just do a client profile?
Well, that's where a lot of these brokerage firms are missing it. You can't take a square peg and put it into a round hole. Every client is going to be different, and we have clients that range from people looking to novice traders looking to get in the market, and as well as clients looking to hedge large gold portfolios, large equity portfolios. So the approach is tailored to them. Everybody's going to have somebody that's going to work with them directly, and understand their needs. And at the same time, we do have our system. It's called the Actionable Trade Idea System, and it's easy. It's system updates that go through a weekly, monthly, and daily chart. And when all of our I guess you can say stars align, it goes into a jury process. We send it out to an email to clients, and it goes out to over 4,000 people. And really, if they want to take the trade, they can. And if they don't, if they have any questions about it, they're always welcome to call the trade desk. We make it really easy for everybody, but at the same time, you're going to have that team in your corner. So whether you're looking to hedge a stock portfolio, or you're looking to catch a breakout in natural gas, or look at some of the grains, or even if you're a farmer hedging grains, we tailor that approach towards you because every client's going to be different.
Okay, so just talking there, you seem to be pretty technical. What types of charts do you prefer, and what time frames do you follow?
Well, I use what's working, and over years I've found different things become work more often, and as mentioned with the system, we look at a daily, monthly, and weekly chart setup, and it's going to bring us some of the major longer term and intermediate term moves. And then we do look for, we're looking at hourly charts on some daily basis as well to try and see some of the shorter term moves. And our research also that goes out every morning covers gold, S&P, and crude oil. We find these the most attractive because they're some of the most highly traded commodities, and we give you levels on a daily basis of what to trade at. We define that range for you. So using a daily chart and an hourly chart as well as a half an hour chart can really help you trade those ranges if that's what you're looking for. But for the bigger moves, you got to look back and you got to look at the history as well. So I don't limit myself to anything. I limit myself to what's working right now, and maybe retracement levels, and maybe trend lines, and maybe moving averages. So what's been working and what's been consistent in that type of market is what we use.
What's the shortest time frame you go to? I heard you go the monthly, the weekly, the daily, the hourly, and then I saw you sneak in a 30-minute there. Do you stop there, or do you go down to even shorter time frames?
Well, when I start trading more and work with clients on a shorter time frame, the first thing that I want to see in order to do that is defining a range. And when we define a range, and a market's been in a range, then we could drop down to a 5 minute and try and capture some of these levels. We put out in the mornings, on the morning call, a podcast from a head trader and founder, Rich Ilchishin, and he helps give you a game plan. And we help define some of these ranges in that game plan. And our levels that are on there too are 1, 2, and 3 star. And if we can define a range between 2 and 3 star ranges, the most biggest barriers, then we can trade that range in a 5 minute or a 30 minute chart on a daily basis. So again, we're not limiting ourselves to what we're looking at.
Do you trade after hours or pre-market?
I don't like I'll pay attention to where the markets are. I'm not going to define a trade from what we see overnight. And unless it's there's news that comes out. Last night there was meeting minutes from out of Japan from a meeting earlier this week. Sometimes there's China data that's coming out that's going to move the market. You have to pay attention to that. But when you're looking for a bigger move and a bigger setup, what I really liked recently, I actually tweeted out so people can see at my Twitter handle at Bill iiTrader, was a silver chart going back a couple months, and I took the daily hours off of it, or the night hours off of it. It was just defined between the day hours, and it was a lot more consolidated, and it looked, I want to say, pretty. And you could define that triple bottom, you could define the wedge, the trend line coming down that was created in that breakout was a lot more defined, and it looked great. So sometimes you do want to take those hours off, and it helps you look at a clearer picture.
Right. Yeah. No, that's true. So sometimes it's good to use it for parameters, and as opposed, there are some good moves overnight. But you're right. You're also leaving yourself open some exposure by the news. So do you go any higher than a 3 star? You said you got 1 star, 2 star, and 3 stars. Do you go any higher than that?
Sometimes we do. It's not very often, and I think right now we may have a 4 star, and it's at the continuous 200-day moving average and crude oil, which coming in there right about 99, 65, 70 area, and the only reason that's there is because we're in a major uptrend, and that's going to be one of the biggest barriers on us as a support level that we're going to see maybe this year. It took a lot of time to chew through that, and it's very rare. But we don't want to limit ourselves because you always have to evolve, and if the market is giving you something that you don't always see, you have to define it in a different way.
Okay, so let's go to the S&Ps here, and I do my levels too. And this 1840 46.75, which is the all-time high. We made that on December 31st, and we bumped up to 1844.50 on Wednesday, 40 and a quarter. I mean, we've been up there a dozen times here in the last 2 months, so I don't know if I'm going to make it a 12 star here, but I certainly, have seeing this level is, perhaps, one of the most important levels that we've had in the S&P since we've bottomed, back in 2009. So what's your trading plan for the S&P futures today? Based on that overhead resistance.
Well, we've had targets in the and again, it's a game plan that we create. We've last year in March, about a year ago, we put out a target in the S&P 1757, and some of the same setups that we looked at to create that year-end target at 1757. We did use to create our upside target of 1853. The market's it's close there, and we've seen it's had a tough time closing above 1840, 42 and a half. So we've actually kept that as a 2-star on a closing basis. Obviously in the 46 and a half is resistance, but that target of 53, it would be a nice move to see a lot of weak shorts get cleared out of there. And I'm not a bear by any means, but I'm defining this as a range that we could see a pop above there. The market likes to go. We call it a Pac-Man, to go there and feed on some of the stops that sit up there, because a lot of people are selling with that stop above there.
Right.
And 53, is a nice target to the upside to see the next major resistance come in. But we're treating it as a trade. 17 on the downside was a 2-star support that we were looking at, and we're just going to continue to use the levels because they've worked. If we close today back down below 32, then this could start looking at a little bit of a failure. But you want to look to buy a new low today, I think, as we consolidate into the weekend.
Okay, yeah, we're just hanging up here, 1839 and a quarter. You mentioned silver here. Gold has been trending up here. It's had its big move, and now it's consolidating here up near the highs of the move. However, what kind of setups are you looking for in gold today?
Well, gold, we treat it as just a trade, and we've been bullish. We've been bullish this year, and this year, because really what you're going to look at is value that's seen, and then we've had some poor data coming out across the board, and this market has really gotten out and gotten out above the 200-day moving average, finding support at that level now. It's coming in here today roughly at 1309, and it's been stalling out a retracement level that's at 1335. So we continue to trade this range, but we're looking at that 200-day moving average as being the major support in the market now and going forward. Same thing with silver. That silver broke out, and we use that 50-day moving average in silver. If you take a look at a chart, it's always stayed above or below that for an extended period of time. So when that 50-day was held through the end of the week before, and it was able to play off of that and then break out above resistance at 20, 55, 65 area, that the bull trend was on. But really, what I'm watching out between the two of them is the silver gold ratio, and it's too high right now, and it's starting to come down. And that's really what you want to see when a bull trend is created. We're not giving up. We're managing risk properly at these levels. 2190 was a retracement level that we were looking at, and we're not letting it all ride on the line right now from being long to start the year. So we're managing that properly, and I think there is more upside to come, but it's not going to be easy for people to buy right here and watch what we've seen over the last week occur again.
Yeah, never is easy. So is your coming out of the chat room here, is your trading platform primarily for day traders and short-term swing traders, or more longer term, or do you accommodate everybody?
Well, we have platforms that are easy for clients to get acclimated to and can really be familiar with it in a week. But then we also have professional platforms that you can customize however you want, and really whether you're a futures trader and you want to customize charts. or customize your quote board, or you're an options trader and you want to customize option chains, and or you want to look at the book trader, the depth of the market, the dome panel. You can customize your platform however you'd like, and we work with you to help you get familiar with that and be able to do so. So the possibilities are limitless.
Okay, do you have a stock screener that's available? Or are you just primarily in the futures space?
We're a futures and commodities brokerage firm, and we concentrate on futures and commodities. That's what we do.
Okay. What's the most common mistakes new traders make?
Well, to go back quick, we do have a hot board. What's red and what's green on the day. You can kind of get a good idea.
Okay.
That's the closest thing we do have as a screener. I'm sorry. Go ahead.
The most common mistake new traders make.
Well, the most common mistake is with the leverage. You have to understand the leverage, and really that comes down to everybody wants to become a millionaire overnight. But when you're new to the market, you got to treat your account like a business, and a lot of small businesses fail in the first year because they're undercapitalized. So capitalization, and being able, and funding the account properly, for what your strategy is going to be is really one of the major keys in being successful.
Okay. All right. And just any final tips for traders?
I'm sorry?
I said just final tips for traders. You talked about the leverage and whatnot. Just any final closing thoughts for people out there?
Well, a lot of people when you're trading your own money, it becomes emotional, and really that's what us here at iiTrader are helping with develop a game plan. We have a process for what we do, and and we deliver that process to you. We help take that emotionality out of what you're doing.
Okay. We've had Bill Baruch on, senior market strategist at iiTrader, giving his thoughts on the futures and commodities markets as well as his approach to the markets. Bill, thanks a lot. You've given us some good tips, and we'd truly like to have you on the show again.
Thank you very much. I'll be back anytime.
Okay. Thank you.